Did you ever stop to wonder how deep in debt the average American is? Well, the facts might startle you. The reality is that the average American is swimming in an ocean of debt. And for many, it seems like there's no land in sight. The numbers, as sourced from various government websites, tell a grim tale. Let's start with the student loans. Education is supposed to be the ticket to a better future, right? But for many, it's a ticket to a future laden with debt. Millions of Americans are burdened with student loans, and the collective figure is breathtaking. Now let's talk about credit card debt. The ease of swiping a card and the promise of paying later has led many down a slippery slope. The total credit card debt in America is staggering, and it continues to rise with each passing year. Home ownership, the so-called American dream, has also become a source of debt for many. Mortgages are a significant portion of the overall debt, with the cost of homes skyrocketing in recent years. And let's not forget about medical debts. With healthcare costs rising, many Americans find themselves in debt due to unforeseen medical emergencies. So the question arises, what does all this mean for the average American? The answer is simple and grim. The average American is neck-deep in debt, and it appears the situation is not improving. But don't lose hope just yet. As we delve deeper, we will explore some potential solutions to this debt dilemma. So stick around, because the journey is just beginning. So, what's causing this debt crisis, you may ask? It's a web of interconnected issues that have been amplified by recent global events. Let's start with the low wages. Over the past few decades, salaries haven't kept pace with inflation. This wage stagnation means that while the cost of living skyrockets, people's earnings remain relatively static, making it harder to keep up with expenses. Speaking of expenses, the high cost of living is another critical factor. From housing to healthcare, everything seems to be getting more expensive. And when income doesn't match these rising costs, people often turn to credit to bridge the gap. This reliance on credit is a slippery slope, leading to a cycle of debt. Now let's talk about financial literacy, or more accurately, the lack thereof. Many people are not equipped with the necessary knowledge to manage their finances effectively. This gap in understanding often leads to poor financial decisions, contributing to the debt problem. Finally, we cannot overlook the impact of the pandemic. COVID-19 has wreaked havoc on economies worldwide, causing job losses and reducing income for many. This situation has forced people to rely more heavily on credit, exacerbating the debt crisis. In essence, numerous factors are contributing to this mounting debt crisis. This ocean of debt isn't just numbers on a page, it has real, tangible effects. It's a shadow that looms over the American dream, casting every aspiration into uncertainty. Imagine the stress of sleepless nights spent worrying about bills, the strain of relationships crumbling under financial pressure. This is the reality for many average Americans caught in a vortex of debt. Bankruptcy, once seen as a last resort, has become an all-too-common solution. It's a desperate move that leaves a lasting mark, tarnishing credit scores and making it harder to secure financial assistance in the future. It's a ripple effect that can last for years, even decades. But let's not forget another casualty in this fallout: the inability to save or invest for the future. It's the cruel irony of debt. The more you owe, the less you can put aside for tomorrow. It's like trying to fill a leaking bucket. You're always playing catch-up, never quite getting ahead. And what about those dreams of financial freedom, the hopes of building a nest egg, of owning a home, or perhaps even dabbling in the world of investments like the burgeoning crypto market? These dreams are often put on hold, sidelined by the pressing need to service debt. Debt is quite literally stealing our future. It's not just restricting our present, it's robbing us of our potential, of our ability to grow and build wealth. It's time we face this harsh reality, because only then can we begin to chart a course out of this ocean of debt. One sector that's been hit particularly hard is commercial real estate. The industry is teetering on the brink of a financial catastrophe. The mounting debt, plummeting property values, and escalating defaults and delinquencies paint a bleak picture. Let's delve into the facts a bit. Experts are forecasting a further 20% slump in office property prices this year, following a peak-to-trough decline of 43% in the United States office market. When you think about it, that's almost half of the market value simply evaporating into thin air. Adding to the concern, banks are potentially staring down the barrel of losing somewhere between $160 billion to $250 billion from commercial real estate. Some are struggling to offload these risky assets, like a hot potato no one wants to hold. Around 14% of commercial real estate properties are already drowning in negative equity, and it's not just a few isolated cases. Between 10 to 20% of all commercial real estate loans could default. The office loan delinquency rate alone has already reached 5%, and commercial real estate debt increased by $37 billion just last quarter. The Treasury Department has issued a stark warning. Office buildings could be abandoned as work-from-home trends persist, eerily reminiscent of the fate of zombie malls during the pandemic. The commercial real estate sector is in a precarious situation, to say the least. The once bustling office complexes and commercial spaces now stand as silent witnesses to a crisis that's still unfolding, and the ripple effects of this downturn could be felt far and wide. With this grim picture painted, one might ask, is there a way out? In the face of such challenging times, it's reasonable to seek a way out, a path that leads to financial stability. Traditionally, there are several options to consider. Budgeting, for instance, has been a long-standing tool in the fight against debt. It involves tracking your income and expenses, cutting back on unnecessary spending, and allocating more towards debt repayment. Then there's debt consolidation, a process that combines multiple debts into a single, more manageable payment with a lower interest rate. It's a strategic move that can simplify your financial landscape and potentially save you money over time. For those in extreme financial distress, bankruptcy could be an option. This legal process can discharge certain debts, providing an opportunity for a fresh start. However, we must acknowledge the elephant in the room. These solutions often aren't enough. Budgeting requires discipline and sacrifice that many find challenging to maintain. Debt consolidation, while helpful, is merely a restructuring of existing debt, not a reduction. And bankruptcy, while it can provide relief, comes with severe long-term consequences, including a significant impact on your credit score. These traditional methods can certainly help. They can provide a sense of control and structure amidst the chaos of spiraling debt. But let's not fool ourselves. They are often akin to applying a band-aid on a gaping wound. They manage the symptoms, but they don't necessarily address the root cause of the issue. In a world where the cost of living continues to rise and wages often fail to keep pace, where economic instability looms and financial disaster is just a job loss or medical emergency away, we need more than just band-aids. We need solutions that not only help us get out of debt, but also empower us to build wealth and achieve financial independence. Traditional solutions can help, but they're often just a band-aid on a gaping wound. What if I told you there's a new, interesting wealth creation option on the horizon? Enter Pulse Zen, a cutting-edge crypto asset that is making waves in the digital currency world. Built with unique tokenomics, Pulse Zen is more than a mere cryptocurrency. It's an innovative tool designed for wealth creation, and it's changing the game. But what sets Pulse Zen apart? Well, it's all in the details, my friends. This socially engineered Web 3.0 token has a series of features that make it stand out from the crowd. For starters, there's the burn function. This process permanently removes tokens from the available supply, reducing the overall number of tokens and in turn increasing the value of the remaining ones. It's a deflationary mechanism that can potentially lead to significant gains for investors. Then there's the anti-whale function, a feature designed to prevent any single entity from owning or controlling a significant portion of the total token supply. This mechanism ensures a fair distribution of tokens and prevents market manipulation, promoting stability and trust in the Pulse Zen ecosystem. But that's not all. Pulse Zen also incorporates a charity wallet distribution. A portion of every transaction is set aside in a dedicated wallet for charitable causes, contributing to social good while creating value for token holders. It's a win-win situation, wouldn't you agree? Perhaps one of the most intriguing features of Pulse Zen is its pay-it-forward function. Every transaction incurs a 2% deduction, which is evenly distributed among all token holders. It's a unique form of passive income that allows you to grow your wealth just by holding onto your tokens. Operating on the Ethereum and Pulse chain network, Pulse Zen offers user autonomy, wealth redistribution, and a fresh approach to decentralized finance. Available on Uniswap and Pulse chain network, it is a promising option for those seeking to diversify their investment portfolio and explore new avenues for wealth creation. Pulse Zen could be a game changer in the world of wealth creation. It's a new dawn, a new day, and a new way to think about wealth. This is not your traditional investment. It's a step into the future, a leap into the world of Web 3.0. So are you ready to take the plunge? So, what does this mean for the average American? Well, it's quite simple. As the commercial real estate sector wobbles on shaky legs and the average American grapples with mounting debt, an intriguing opportunity presents itself. That's right, we're talking about Pulse Zen. Now, you might be wondering, just what is Pulse Zen? Think of it as a socially engineered Web 3.0 token with unique tokenomics. It's built on the Ethereum and Pulse chain networks, and it has several interesting features like a burn function, anti-whale function, and charity wallet distribution. It's designed to distribute wealth automatically, making it a potential game changer for those in a financial bind. Every transaction with Pulse Zen incurs a 2% pay-it-forward deduction, which is evenly distributed among token holders. This means that simply by holding onto the token, you're earning more. It's a passive income stream that could potentially help you chip away at that mountain of debt. Now, it's important to remember that investing in cryptocurrencies, including Pulse Zen, is not without its risks. The value of these assets can be volatile, and there's always the chance of losing your investment. That's why it's essential to do thorough research before diving in. Understand the market, the technology, the risks involved, and how Pulse Zen fits into your overall financial plan. But if you're willing to take on the risk, the rewards could be substantial. Pulse Zen's deflationary mechanism and charity wallet deductions add another layer of potential benefit for investors. It's not just about making money, it's about being part of a community that values wealth redistribution and user autonomy. In a world where traditional financial structures are increasingly under strain, Pulse Zen offers an alternative. It's a chance to take control of your financial destiny, to step away from the precipice of debt, and to possibly build wealth in a new and exciting way. For those willing to take the plunge, Pulse Zen could be a lifeline in these debt-ridden times. In conclusion, the American debt crisis is a complex issue with no easy solutions. The roots of the problem dig deep into the very fabric of our society, undoubtedly leaving a substantial impact on the lives of countless individuals. The looming shadow of the commercial real estate crisis only adds to the severity of the situation. Yet, amidst the turmoil, there exists a glimmer of hope. A way out of this financial maze might not be as elusive as it seems. We've explored the concept of decentralized finance and the potential it holds for the average American. In the face of mounting debt, Pulse Zen emerges as a beacon, offering a unique and innovative approach to wealth creation. Operating on Ethereum and Pulse chain network, Pulse Zen is a socially engineered Web 3.0 token with unique tokenomics. It includes a pay-it-forward function that automatically distributes wealth, creating a ripple effect of financial prosperity. Its deflationary mechanism and charity wallet deductions further accentuate its potential as a tool for financial liberation. However, it's crucial to remember that while Pulse Zen provides an interesting alternative, it's not a magic wand. The volatile nature of cryptocurrencies necessitates a cautious approach. As with any investment, it's crucial to make informed decisions and understand the risks involved. While the road ahead may be tough, innovations like Pulse Zen are paving the way for a potentially brighter financial future. The journey out of debt is a challenging one, but with resilience, knowledge, and innovative solutions like Pulse Zen, it's a journey that can lead to a destination of financial freedom and prosperity.